Good afternoon, everyone on the East Coast, or good morning if you're joining from the West Coast. In case we haven't met before, I'm Alex. I'm the co-founder of TechTO. I'm also an operator with 2 exits. I've sold my soul and done professional services for consulting and investment banking, and I'm an active investor in Canada. Uh, we host Founders and Funding every couple of weeks to really demystify the fundraising process and the relationship between investors and the founders that are building companies. You can go on the web, you can read lots of blogs, you can join Clubhouse, listen to lots of conversations. But what we find is very rarely do those conversations or those blog posts get to the real truth behind companies. So we started this to help make sure you get a true idea of what's going on. Today, I'm excited to feature Aaron from Taplytics and Andrew from Initialized Capital. I'm particularly excited about having Taplytics because they were one of the first Canadian companies to go to YC and quickly return to Toronto after the program. But before we get started, I want to give you a few rules of the road. If you haven't found it yet, there's a chat on the side of the screen. Go ahead and introduce yourself and let us know why you're joining us, where you're joining us from, and why you're joining us today. Put questions in the Q&A tab on the right. I love to bring in questions from the audience and make sure we answer them. So if you put, I can't ask them if you don't put them there. And there's also this emoji cannon. If you try it, we try different emojis every time. Let's go give it a try now. Let's get a virtual applause, please. Good. I'm glad to see it's working. And after we go through the conversation, after that, we have the far side. If you want to meet other people, we have a networking option where we'll let you meet, give you 4 minutes of sort of chat roulette style, pair you with someone else here, and you can learn from each other. And before we go to that, I'll explain the best ways and how to get stuff out of networking. Finally, if you like what we're doing, or if you don't like what we're doing, share lessons learned on social media using the hashtag TechTO. Before we like to get started, I'd love to bring up Anna from SalesRight/FastSpring. We couldn't do this without you guys. You make this possible. So Anna, I guess it's winter in Halifax.
It is winter, but we got about like a foot and a bit of snow a couple days ago, and then it rained, and now we have nothing. So it's like it never happened.
That's why I get the command seat chair, not a nice outdoor, just slush.
Yeah, no, it's grass now. There's no slush. It's just grass. Okay. But thanks. Yeah, so FastSpring now just acquired SalesRight back in November. So SalesRight is here to help SaaS sales teams sell so much better. And it uses interactive pricing tools that end up saving you 10 plus hours off your calendar and frees up so much more space. So because FastSpring is a leader in the e-commerce world, especially now in SaaS, we want to make sure that how you're selling your products is the best way possible. We put together a guide to talk about how you can make sure that your discounts and your promotional campaigns can work so much better. I'm going to put the link in the chat to the downloadable guide. And you can also find out more about SalesRight as well. I'll put both those links for you. And don't forget to connect with me on LinkedIn and ask me any questions you'd like about either FastSpring or SalesRight.
Thanks so much. I hope many people take it up because I've heard nothing but good things. Maybe we can get a case studies one time.
Yeah, that'd be great.
Cool. Thanks, Anna. Now I'd like to get on to the main event. I'd love Aaron and Andrew to join us. As I said, for people that don't know Andrew and Initialized Capital, they're based in the Valley, and Aaron and Taplytics are based in Toronto. Please join us on stage. Hey guys.
Hey, Alex. Hey.
Yeah, so as you can see, I'm not big into giving intros. So maybe, Aaron, can you just take a few minutes to give us a brief introduction of who you are and what you did before Taplytics?
Sure. My name's Aaron. Here we go. I'll get centered. My name's Aaron. I'm one of the co-founders and CEO at Taplytics. Prior to Taplytics, I was also doing sort of a similar thing you were doing, Alex, in consulting, as well as another startup with one of my current co-founders. Taplytics, for anyone who doesn't know us, Taplytics is the #1 feature management and experimentation platform. So we combine critical infrastructure your engineers will love with no-code tools that everyone else will love to drive revenue, engagement, and retention with your users. We work with a number of really amazing customers like RBC, Crate & Barrel, Chick-fil-A, and many others. And really happy to be here.
Thanks for joining us. Andrew, tell us a bit about your background. You didn't start off as a VC. You had some startup experience. Give us the 2-minute rundown what you did before Initialized.
Oh yeah. So, well, thanks for having me, Alex. I'm excited to be here virtually in the six and representing all of Toronto. And I'm also very excited to go ahead and talk with Aaron, one of our shining lights of our Canadian investments. So I previously was a founder before. I had started a gaming company called Jam Legend. We sold that to Zynga, and I actually helped lead product on a company on Farmville. Which was played about I think 1 out of every 12 people in North America for a period of time. And I was there through the IPO. So I'm a former founder myself. Afterwards, I spent a little bit of time to atone for my sins on Farmville at the White House and the U.S. Small Business Administration. I came back, started another company in the enterprise SaaS space. And after that, I had the opportunity to go ahead and join Initialized. So for Initialized, we're the honey badgers of venture capital. We tend to invest in folks who are fierce, agile, relentless, folks like Aaron, no matter where they are, especially in the cold north, where I guess, I'd rather call, I guess really Aaron's more of a Wolverine then in that regard. But I mean, for us at Initialized, having made the transition from being a founder to investor, I can't think of anything better. Honestly, it's possible that I may not be a very good founder, but it does allow me to be a really good employee. So the way I think about it right now is we tend to work with these companies, and I basically work for Aaron, but then we have the privilege of being able to be his investor too.
So a couple of things before I get back to Aaron. One is, how did your startup experience impact your relationship with companies or with Aaron and your portfolio companies, and how's it enable you to be a better employee, as you say?
Yeah, I mean, it's interesting because Alex, I think you can probably identify with this too, is that when you're first doing a startup, you tend to think to yourself, oh, well, all these things that I'm doing, it's just blocking and tackling. It's like I'm sending emails, or I'm like learning how to deal with people. And you don't think that you've gained a lot of skills. But if you do that over a decade plus of work, you realize that actually there's a lot of skills that you've accrued. And especially if you're doing it amongst some of the best startups, right? I've had friends who have failed multiple startups. I've also had friends had $1 billion IPOs, right? And seeing and being able to just draw that from pure diffusion is really powerful. So for me, actually, it's funny. I don't even really still think of myself as an investor. I just think of myself as someone who is, whenever I am with another founder, the number one thing I'm always thinking about is, one, do no harm. And then number two, like, what can I do as your friend to go and get you to the next stage? And it's weird because I think the thing is, that is something that experience paints a lot, because it's like, it's so much better to be to have an investor who's been a founder and an operator, because they can just sort of level with you and tell you, oh, hey, that's a minefield. Like, definitely stay away from that minefield. That's a big problem. Sort of like a simple one that some people always talk about is, don't get a huge commercial lease. Don't like try to get a big office to make yourself feel. Don't play house, right? Get a tiny office. It's fine. Like, Aaron can probably tell you how cramped he was when he was when he was beginning, and that's something I think that it's hard to understand because there's just a lot of misinformation out there, I think.
Sorry, family just came in, so it was on mute.
No worries.
Love that advice. And Aaron, maybe later on we could talk about COVID. Did you guys, actually, quick question. Did you guys have a big lease when COVID hit? And do you still have that lease, that commercial lease?
So we had a short lease when COVID hit. We still have the lease, but we aren't making much use of it right now, unfortunately.
So Andrew's advice paid off right away. One more question for Andrew, then I want to go get a bit of history in Taplytics. So what is the Initialized investment thesis? And does each partner have focus on a different part? Because again, I'd love to get the context before we get to the conversation. So.
Oh yeah, absolutely. I mean, so Initialized, so for us, we're on our fifth fund, so we've grown quite a bit, right? A lot of folks think of us as, we were the first check in Patreon, we were the first tech in Coinbase, Row, and a number of different companies. But Initialized right now, we're still a generalist firm. The one thing that we definitely do care about is we care about scale, right? Your ability, if there's one thing that defines a startup, it's ability to go ahead and grow quickly. And so that lends itself actually to sort of our background, which is primarily in technology and software. That doesn't mean that we haven't invested in things that aren't but the main thing is we just love technology and software because we still think that it's going to eat the world. And I think the main thesis for us is we're looking for founders who are just these wonderful individuals who see problems and they want to solve it. They roll up their sleeves and they're willing to go and take on those problems. If you're two people in a basement trying to solve the problem of marketing and communications or whatever problem that you see in your daily life. Those are the types of founders that we want. I mean, for Aaron, for example, he was, on the side, he would hack on Arduino. And that's like, those are the types of people that we love. Like, we love people who are natural builders who want to go and solve problems. So it doesn't answer the complete question of like, is there a particular thesis? I think for us, if it's something that can achieve scale quickly, especially with software, that's something we're interested in.
Cool, and I think that's a great segue, Aaron. So go back to the start of Taplytics. Why did you start it? What was the problem you were trying to solve? What were you badgering away on?
So I think the start of Taplytics actually starts before the start of Taplytics. So so there's 4 co-founders, 2 brothers. We've known each other since high school, lived together at university, just 4 people that really enjoy working together and solving problems. And we were all doing that in our night jobs, sort of basically, like doing something during the day and then going back at home and hacking out on something or playing with code to try and solve a problem at night. And it got to a point where the 4 of us were really enjoying doing that at night, in support of whatever we were doing, a lot more than what we were doing during the day. So we ended up quitting all of our jobs, getting together, and we started building things that solved our own problems. And if we go back in time, this was right about the point in time where the iPhone camera was getting really good, but the hardware storage wasn't kind of keeping up to the camera.
I think that's still a problem, at least the way Apple designs it. But at that point in time, there was really nothing you could do other than like get the photos off your iPhone. Yeah.
And we didn't like that problem. So we just started solving it. And we built some software that would allow you to take the photos on your phone, upload them to Dropbox, keep the really low res downloads on your phone, and kind of keep taking photos. Very similar to what we take for granted today inside of iCloud. And that sort of natural tendency to keep solving our own problems is what sort of drove us further together and eventually ended up with Taplytics. As we kept on building sort of these apps and building things that solved our own problems or piqued our own interests, we stumbled across one of the challenges with mobile development, both at the time and today, where it was very structured in its approach, but mobile apps were very like tightly controlled by the mobile development teams. So even as a team of 4 people, which you'd think like, everyone can get in there and do things, we were even sort of constrained in the way that we were able to build our apps. So, we did the same thing that we did with the photos. We started solving our own problems, and we were building different ways for us to build our own mobile apps for release to the public. And that created some technology, which we were then able to apply to a real world problem of how do you actually help, full cycle development teams build great apps and then, continue the evolution of the company from there.
Cool. And then when you started, you're one of the first Canadian companies, I think, to go down to YC, or you started the wave of great, let's say, corridor companies going. So why YC?
Well, it came off of, there's I definitely don't want to say we're one of the first, but we were lucky to be fairly early, I think, in the stream of Canadian companies that have gone down recently. For YC, one of the benefits of YC is that it plugs you into an ecosystem that you just don't have access to in Toronto and in Canada. Both from the ecosystem of all of the different parts around how do you build a startup, and funding and great investors and are one part of it. But from YC itself, you were immediately plugged into a group of the absolute best founders at your stage anywhere else in the world. And there's no drive like being in a room of all of the smartest people in the world, most tenacious people in the world, and saying to yourself and your co-founders, like, let's not screw this up.
Cool.
And for us, that was a big moment.
And so when you were down there, I guess, is that when you first met Initialized? And how did you guys meet? And I don't know, Andrew, were you at Initialized at that point?
I was not Initialized at the point. So I part of this is I'll let Aaron speak first, and then I'll tell him about some of the things that were happening in the background from what I've heard.
Okay, this is like, because I imagine, am I correct? That's when you guys first met Initialized?
Yeah, so Initialized at that point in time wasn't as public, I think, as it is today. It was, there were some of the main partners of Initialized were Y Combinator partners at the time. And we got to know them not through, seeking investment, but really seeking advice and seeking that kind of mentorship And just as Andrew was talking about, sort of that ability to bounce ideas off of you and pattern match, like, yeah, this is not a great idea from what I've seen, and be able to replay that into your thinking. And that's really how we got to know each other.
So tell me a bit more about that, because I think it's still in Canada. You see lots of founders say, okay, I'm going to fundraise now, and then let's go have these conversations. It sounds like you went to YC, you started talking to potential mentors, and you were problem solving with it. How important was that for you to raise, and also feel comfortable with who you were taking money from?
So we had raised a little bit of money before we went down to YC in Canada. We spent a long time doing it. It was really painful. And we met a bunch of amazing angels, and that was sort of the first money into our company that are still with the company today and still amazing supporters of them. But there were a few in that group that were not the right investor for our company, not the right type of capital, not the right time horizon. And looking at it as something that should immediately turn around within a really short period of time and be publicly traded, which just isn't the reality for a company at this stage. So as we learned from that experience, what we were looking for going forwards, and is really still our thesis today, that we're looking for people who, A, get excited about the problem area, the problem space. I think one of the first questions, if I remember back to one of the early chats I had with Gary, was not what are you doing today, but how big can this be going forwards? And we actually started getting to this jam session about, like, how do we make this into something really huge? And the excitement, it really becomes on both sides as it evolves, and really builds sort of that trust and the excitement to work together.
Cool. And Andrew, what from your notes, what have you been able to figure about this critical period from Initialized perspective?
Yeah, so this is fun for me because you can see the beginnings of Initialized now becoming what Initialized is now, and sort of what were the pattern matches. And I think this is going to be helpful for a lot of folks who are watching clearly. So I'm going to tell you I'm going to just do a couple fun quotes here, which was, one of the first times, one of the quotes was super thoughtful Canadian, which I feel like is sort of redundant because every Canadian I've ever met is pretty super thoughtful. And then the other, from a separate partner at the same time, is very likable Canadian founder, which again, I think is like,
feels very Canadian.
It's very redundant, right? So I think that number one, and then there's a clear thing that says, like, worked on this on the side, worked on it in his spare time, clear drive, wanting to solve a problem, right? Like that, like, just springs out to me from all the investments that we've seen in the past. It's basically like this person really wants to solve a problem and isn't focused on the issue of, hey, I just want to make a big company and IPO and try to be rich and be on Shark Tank or whatever it is. Like, it is much more about, hey, there's something that we're trying to solve on the side. So that by itself is like clear builder. Like that's a very strong endorsement on the team side, right? The other one that is kind of fun is the quote that specifically talked about, like, great lighthouse customers. And in addition to that, it was sort of like, it actually harkens back to Aaron's point, which is not only the customer list, but it was like market size is very interesting. Like there's definitely movement in this area. And at the time, there were a number of different names. I don't know if Aaron wants to go ahead and describe some of those names, but there were some names in there that were like, hey, wow, you're not that many people, but this is actually a quite impressive list. And that showed us just early traction. It showed us two things. One, they had drive, like they were able to get, they're in Canada, like like, as Aaron was describing, he's just trying to solve this problem, and they're able to go and rack up customers, which clearly shows us that, like, not only can they build, but they can actually have a good sales go-to-market motion. But then the second part that's interesting there is we just kept on seeing not only what was happening within the space, that market was being reshaped. And that was really interesting to us. And then the very last thing that I thought was pretty interesting was, besides the team, the product, and the market, I think here was, there was this fun thing where folks would say, hey, I just feel like something's going to happen here. Fingers crossed for them. We think it was very much I just feel like we should do something. Like, there was this gut feeling. It's very interesting how in some of these notes, because at the time we weren't very good at taking notes as well sometimes. But what we're gleaning from it is some of these notes were just like, hey, like, there is that, my gut right now is telling me that we want to work with this company.
And let me pick some of that apart so we get a better understanding. So, like, both of you talk about solving problems. So how important is the nature of the team, and Aaron, how important was it for you that you had a problem you want to solve versus what the problem was? Like, did you just have the initial curiosity, like, why this problem, and how important that, Andrew, the problem they were working on was a problem that's worthwhile solving? Like, are you just going for intellectual curiosity and horsepower, or is it the right problem? And Aaron, I'd love to maybe start with you. Like, did you care what you were solving, or did you know there was a big market that got you more excited?
So we did care about what we were solving, and we only did that through kind of making an error and solving a problem that we didn't care about before that. So prior to working on this, one of the things we worked on, in between the photo app and Taplytics that I kind of skipped over, was this social music game. And this is right in the days of when Andrew was at Zynga and social gaming was really big. And we were just really excited about getting into this area, and we developed this cool social music game, and you could sing with other people around the world, and we had auto-tune built into it. It was kind of fun. But we had a chicken and egg problem where we had to get users to get on the platform to challenge other people. And the way that we got around that originally was by having one of my other co-founders, Kobe, who was the de facto player for every other side of the game. So he was playing and singing with every other user on the platform at the time. And we were growing, we were getting press. It was, the app was growing, but we just weren't passionate about it. It wasn't fun, and it wasn't something that we wanted to do for many, many years after that. So solving a problem that was important to us, and that was even our problem, I think, became really important in our sort of decisioning matrix of what we spent our time on at that point.
So Andrew, flip side of it. So you see them solving a problem, you see them have intellectual horsepower. You also mentioned market size. So like, maybe you weren't there at this decision, but when you or Initialized looks at it, it gets down to smart team and, versus market. Is it a balance? Like, how do you view, what was more important here?
Yeah, so I feel like this is an old adage, but I'm gonna say it, which is basically, look, like there's a number of different areas that occur, right? You can have really good teams, and then you can have really bad markets, right? Or you can have good markets, you have good teams, right? So here's how it usually happens, right? You have a good team, but if the market's not there, everyone's really sad, right? It's just really, really sad. You can have but then you can have an okay team, right? It's like an okay team, but has a great market. Everyone's going to be fine probably, because like the market's going to lift everybody. But where magic really happens is when you have a great team and you have a great market. Because when those two things occur, that's when you build like amazing companies that are fundamentally going to reshape whatever technical infrastructure. So the way that I tend to think about it then is market is a necessary condition, not a sufficient one, right? Similarly, a really good team is a necessary condition, but not a sufficient one. There's a combination of those things. So when I think of Aaron, I'm thinking about Taplytics. I'm like, look, number one, we knew things are happening in the market at the time. We knew that like it makes sense, right? Like everyone's adopting phones. Number of companies out there need to find ways to get in front of those people with phones, and that's not an easy thing to do. We tend to think that if we think about it, push notifications are still being experimented on everywhere, right? And large companies are just getting onto that wave. Luckily, they have Aaron to sort of guide them through that whole process, and just through how do you deal with mobile in general. But I think fundamentally, we do forget that it's the development of the market that takes a while, and that's the gut feeling that I get, is that if I think through a market, I'm like, okay, it's going to happen, right? Like there's probably something that's going to happen in like crypto blockchain in 30 years, right? Yeah. But the problem with that is the difference between that developing in like 5 years to 30 years is vastly different, depending on the good people who are there, who are willing to work every day, coming up with new ideas, evolving the market forward. And that's something that I don't think founders think a lot about, which is that, you need to basically be, not only the market has to be attracting some of the best people, but at the same time, those people have to want to move the market forward. Like people think that the thing that's gonna kill you is competition. It's not that. It's never competition, right? The thing that's gonna kill you is usually your market, because it's not evolving fast enough to go ahead and take on whatever the legacy system that's out there. So that's the gut feeling that I get, which is like, is this a founder who's gonna basically move this market forward and evolve it in a way where, I don't know, it's like Pokemon or something. It's like Pikachu becomes like, Raichu. It's like, how can we accelerate that process so we're not grinding away trying to try to catch really lame Pokemon and like do small battles. Like, how's this person going to take on big battles, like upgrade, become really amazing? Like, that's the thing that I'm really excited by.
So
Alex, I think I was just going to add to that. I think that's really where the key between like the difference of a problem that's investable versus a problem that you're passionate about really comes in. because the investable problem isn't one that you're going to continue toiling at to try to like move the market and create the market at.
Cool. I have a couple of questions from the audience, but I have to ask one quick question, Aaron. Which Pokemon are you? Do you even know Pokemon? You follow the Pokemon?
I don't follow it enough to give you a good answer, but I'm sure my team's going to ping me with which one they think I am right now.
I think Aaron is Charizard. He's like, initially you're like, oh, it's a fire breathing dragon. That's cool. But then you realize you're like, damn, that's a fire breathing dragon. And then everyone like kind of doesn't think a lot about Charizard. They're just like, they're like, oh yeah, of course. But you know, Pikachu's cuter or whatever. But then you realize you're like, what? If you're stuck in the middle of something and you're like, I need some firepower and I need someone who is like a killer, great, like, you know, it's just he's dependable. He's all there. I mean, that's what I think of Aaron.
There you go, Aaron. A couple questions from the audience. One for you, Andrew. You talk about your gut. Your gut was telling you to work with them. How do you balance gut versus data? So is this, and I guess you also talked about market. Like the market looks like it should be there. But, you know, gut is 5 or 30 years. So, you know.
Yeah, I think part of it is, you know, part of that pattern match is also founder market fit. Right? Like you can just tell when a founder has been out there in the woods experimenting a lot. I mean, you know, we're talking about Aaron, we're talking about Taplytics of old, right? Yeah. But I mean, you can see it now with Taplytics of new, which is Taplytics of new is gangbusters. I mean, and I'll let Aaron sort of like, you know, give the data, whatever he wants to go and reveal. But I mean, to any investors out there, they should be getting the same sort of like gut feeling, which is on founder market fit, right? Like there's two things that I think occur. One is, you know, we're all familiar with like, you know, trough of delusionment, like hype cycle, all that stuff. I feel like what we try to tend to look for is where the market is the best is when a lot of people have gone in and completely failed. And then there's a bunch of people who are survivors and then they're very quiet survivors. And then all of a sudden 10-year overnight success. And that's when you know a founder and a marketer together. I mean, like you're already hearing it from Aaron where he's like, hey, you know, we were working on so many different projects. We had things that we just didn't care about. And we were just, and then all of a sudden we stumble upon this idea. We start getting early traction. And don't get me wrong, every founder goes through really tough times, right? And I'm sure Aaron can go and describe some of that. But right when you find the founder where it's like the market, nobody really cares about, they think it's over, but it's actually right about to go ahead and break. Those are the things that I think that we're most excited by when I see founder market fit. Otherwise, it's usually like, hey, the person is a clear subject matter expert and they're very principled and they want to go ahead and make, you know, they want to evolve the market.
Very cool. Another question for our audience. This one for you, Aaron. You talked about how going to YC provides you a core of smart and motivated founders. Toronto is growing as a tech hub and provides its own opportunity for new ventures. Could you talk about some trade-offs as you see them between going to the Valley and sticking out in Toronto? And this actually was my next question I had was, why did you guys come back to Toronto after YC and a couple other? And then I want to skip a bit forward, but let's answer this one. How do you look at
for the weather? Clearly for the weather.
Yeah, it's been a mild winter. It's starting to snow right now, so it's not that bad. Hey, we don't get 3 months of forest fire now.
Touche.
Sorry.
So I think the question about Toronto versus the Valley isn't one that I don't think you should necessarily look at it as a Toronto versus the Valley or Toronto or the Valley. I think it's one of like, how do you embrace the principles of the Valley and have made so many Valley companies really successful, which, you know, location is one thing, but I think location has just helped to more rapidly ingrain those values. So thinking of your time is limited in whatever the company you're doing, whatever you're doing, surrounding yourself by people who are smarter than you, who are succeeding. Like within YC, there's so many other great companies that were in similar problem spaces or had similar founding teams. And like the Segment team, for example, I remember sitting down with them right after demo day, after we were on stage, and sitting down with them and really just talking about how they made their journey from what they were doing before into Segment, and talking about how that moved its way into what we were doing. So I think it's, whether you're in Toronto or you're in the Valley, I think it's a matter of like, how do you surround yourself with people that you don't want to come back the next day and say, we didn't pull it off, we failed. So for us at YC, it was like, don't fuck this up. And then it continues at every stage along the way. We raise more money. We have great people on the team. It's like, we've got an amazing opportunity as founders, as team members here to build something great and to create value where it never existed. And it's, like, don't fuck it up.
Cool. I love
which keeps
that. Let's
driving us.
let's talk a bit about the journey now. And Marilyn, I see your question. I'll get to it in a bit. So YC, I think that's when Initialized you guys invested around YC, and then you came back to Toronto. And so I'd like to talk about that. Was what, 4 years ago? I lose track of time. Is it about 4 years?
It was about that.
Yeah.
You have to go back to the replay of, I think, our founder Kobe at the time.
Yeah.
Doing
So yeah,
the talk.
I know it was a Telus, so maybe it was 6 years ago. Somewhere between 4 and 6 years. I have no track of time anymore. It just Groundhog Day.
It was pre-COVID.
It's pre-COVID. That much I know. So you come out and you've gone on the journey since. So like, give us the highlights, some of the highlights and lowlights that took you to where you are now, and I'd like to hear where you're now. And also, I'd like then to hear from Initialize or Andrew's perspective, how you worked with them through that, and how do you trust the founders to make a decision? And then I might ask a couple of questions. Like, I also like to know, how the relationship with Initialize changes. Andrews seems to be more involved now than whoever wrote the initial check. So lots of questions there. I'll let you ramble a bit, Aaron.
Sure, I can start with two of the highlights. I think the biggest highlights of transition from where we were in those early days with just 4 founders to today are the people we get to work with. So our team and the customers we get to engage with. We genuinely come into work every day and are excited about what we're going to do that's fun. And the customers we work with are like similarly changing the world in a consumer-facing sense. And we get to ride on their journey. Sort of similar to like investors get to ride along the journey of the companies.
Cool. And then let's talk about maybe some of the bigger decisions you have to make and how you leaned on, or if you leaned on Initialized, and then I'd love to hear from Andrew. What's the perspective as you see a company go through its various ups and downs? How do you encourage them to make the right decisions? So, like, Aaron, I imagine it hasn't all been up and to the right. So, what are tough decisions you had to make, or tough challenges you faced, and how did you get over them?
I can start on my side. There's tough decisions every day. There are countless. I think every day you're met with little decisions, and I think it's a compounding of those little decisions that turn into a great outcome overall. For us, we've moved from Toronto to the Valley. We've moved from the Valley to Toronto. Those are 2 massive decisions that sort of moved a whole bunch of families and teams. Those are incredibly large ones, but even smaller ones of, how do we look at our positioning? How do we engage? What do we do on an internal thing? Even little things like, COVID sucks and everybody's at home and we don't see each other. How do we make it great, a team experience where we can all kind of get back together, where that culture is so important.
And then Andrew, I'd love to see, you're not there day to day. Initialize, again, couldn't figure out if Initialize had a board seat or not. So how do you work with Aaron and the Taplytics team, and how do you what's the relationship like? How do you encourage them to be successful or help them navigate the waters?
Yeah. Well, number one, back in the early Initialized days, we were a much smaller fund, as Aaron was describing, right? So we didn't take any board seats or anything like that. In fact, we still to this day really try to be as founder first as much as we can. So we don't tend to take board seats because it just sort of misaligns direction at this early stage. It's more about like, how can we be together to work and to help solve problems together, right? It shouldn't be sort of like hey, you're reporting to me, and then we're gonna. It's not that type of relationship that we want to create from the beginning. In fact, we think it's sometimes problematic in that regard. I would say that there's a couple different things. Like as Aaron's been describing, he's been talking about how do you think about whether all things, right? Like whether it's the landscape, market, positioning, all the day-to-day sort of blocking and tackling. Well, for us at Initialize, the way we think about it is this: like let's assume that one of the problems that you're dealing with is your competitors are, they're not doing that well, right? So then what they're doing is they're shedding off their customers and then they're coming over to you. But the thing is, they have all these bad habits from having worked with them, right? Like they may provide too much customer support and they're not actually giving you as much technology. They're not empowering some of your own internal people, right? And that happens a lot. That is a problem that we, like Aaron might tell us about. I'm like, okay, hey, that's a problem. How do we make sure that when these new customers come in who have these bad habits, how do you lock them in? What's the technology that you can build? And we just think about it. How do we build ourselves out of it? Number one. But the other thing that I think is pretty interesting is that we tend to have, back to Aaron's experience over at YC, we're almost like YC plus plus. And the way we do it is we have office hours, every 4 to 6 weeks or so. And Initialized of now actually has a number of former founders and operators who all of us come with a different sort of superpower, right? Me having been in the world of gaming and growth and having run 2 startups, I tend to bring this world of like, hey, how can we solve things and help you grow? I have other wonderful partners like Aldalou Dennis, who was the first general counsel over at Founders Fund. She helps out with all the regulatory, and she's there to tell you, she's seen it all, literally seen everything. Because she's not been through 1, not 2. Now, according to her, she's been through 3 recessions. But I don't know where she gets the 3rd one, but I think it's in there in the world of tech, because it was like tech had its own thing a couple times. I think we have these excellent partners and who surround the founder. And the way we think about it is it's sort of like a honey badger den, right? Like you go in there, there's always someone who's going to do something, be able to help you out, whether it's on the PR side, whether it's on follow-on fundraising, whether it's on anything related to just what do you need now to help solve those problems. And then when we need to step up and do like a 30,000 foot view, we can also do that as well. Because, Gary's seen, I think he's probably seen more startups than literally anybody out there, given both his YC experience and his Initialized experience. And now he's like, has his own YouTube channel. So you can literally hear him talk about startups all the time.
If it's your own YouTube channel, it has to be credible. Then talk about like, so how, Aaron, I'd love to see, like, how do you know when to go to Initialize? Do you do normal check-ins? How do you take advantage or leverage the relationship? I don't like those words, but I think when most people that are viewing this right now, they're early either pre-seed or seed founders. They look at their VCs as capital, and I think they're either scared of telling them when they need help. So how do you nurture this relationship? How do you know when to call Initialize, and how open and vulnerable can you be?
So the interesting thing about Initialize and us is that we started out in that relationship of trusting each other before there was any capital involved. And that ability to kind of have real discussions and reality-based discussions of here we are today, rooted with this excitement of where can it go, I think has always kept us at that point of leveraging the Initialized team. In terms of when, there's inflection points, there's times where you don't know what type of decision to make, where you can leverage the experience from others on the team where, they've seen it. Like the great thing about VCs is they're wonderful pattern matching machines. So it's like, where does this fit into a pre-existing pattern? How does that apply to this decision? And then how do you make a better decision this time than you would have otherwise? But I think that trust is so key. That I trust them that if I go to Andrew or I go to Gary and I have something that I'm genuinely curious about, I trust that if I tell them the real situation, they'll give me a good answer and still be excited about where we can go.
And I want to point this out. I want to emphasize this point, right? Which is that, whatever, there's a lot of other investors out there, whether it's, investors at our stage or even further stages, right? It's very, very hard to find founders who are both strategic and analytical, who are both who see a vision for the future, but also at the same time are imminently coachable and understand what's happening in the market. That is a rare combination. Because everyone pivots, everyone's on one side or the other, right? Like you're super stubborn and but the thing is, it's very rare to have both of those things, and that is something that we've really enjoyed with Aaron, because he's just one of those folks that he understands. He's a subject matter expert, understands the market really well. His company's growing like gangbusters, and then the other part is when he tells us the problems, we know it's from this area of mutual trust. And I don't know, I'm just sad that I would say that if Aaron were to come back to us now, we would obviously fund him. And I'm just sort of envious, I think, of the next investors who get into his deal, because they're going to just have a wonderful relationship and someone who's going to be a working partner. Interesting.
I have before I ask my follow-up question, if you're watching, you have questions, we've got a few minutes left, so make sure you get the questions before you lose your chance. So let's talk about, I think Initialized, again, compared to most Canadian funds, you're a large fund now. And I imagine you have lots of dry powder for follow-on investments. So, and again, don't know what the funding situation is because Aaron and Taplytics have sort of, I think, have their blinders on and just execute. And, I think most people here don't realize how big you are. And so we'll give you a chance to share any stats or any
this is why we want to invest in Canadian founders, honestly, because it's cold. You just focus, you just work, and just stuff happens. It's amazing. It's like you're definitely like it's Game of Thrones. It's the North. Just stuff happens, and they're like, you wake up the next morning and it's a whole castle's built.
Well, I also know that one thing I keep hearing back from the Valley is Canadian founders come and almost short sell their revenue projections, while someone from the Valley is like, okay, we're going to be $1 billion revenue next year. And then the Canadian founder with 100 million revenue is like, maybe we'll get to 120 next year, but if everything goes right, which I think it will be 180. But the question I have for you is like, how does a founder relationship? How do you think about the follow-on rounds, and how do you make everyone comfortable that, like, I imagine you have your pro rata, but is Initialized potentially leading the next rounds, or how do you help the founders get to the next, to make sure that the next round's the right round for them? And
so for us, now that we're a bigger fund, what we tend to do is we reserve a portion of that for reserves for us to go ahead and participate in pro rata. We tend not to go ahead and do the next round just because we have a large number of companies. We actually can't do the next round because it just kind of breaks the model. Because if we did everybody, then it'd be like, okay, well, that's it. Like, we just got done in 3 months. No more fund. I think the way we tend to think about it, though, is that's why we have these programs for follow-on fundraising to go and help folks. Because I think founders, they shouldn't be spending all their time with venture capitalists, right? And I'm glad that Aaron is doing this in a public setting so that he's able to maximize his time with us. But most of the time when we're working with follow-on fundraising, we're the people who are hanging out with creating these connections and then putting in matchmaking, because out there is a really good investor for that individual. And the thing is, we just have to help them find it. And I think in relation to your question about follow-on fundraising and just in terms of like, pro rata and things like that, I mean, we're lucky that we've had some, wonderful investments. We were the first check in Coinbase, for example. And I think the thing is, when we think about just what can be the next thing, we try to provide all that coaching so that founder's ready for the next round. And founders just tend to think sometimes, they're just like, oh, well, I have to raise the next round. It's like that's actually not true. Like, the greatest companies are ones that are making money, are default alive, and are able to just they can write their own ticket. They have infinite optionality, and that's something in which I think. I mean, like you're saying with Alex. I mean, Alex, you're saying that Taplytics is an amazing company. Like they're very big, and they are. It's because Aaron actually is fundamentally very good at running a business.
And I love the idea that default alive is so undervalued everywhere right now. So if you can be default alive, I think founders don't realize how important that is. And Aaron, I guess I think Andrew asked about answer the follow-on question. From your perspective, I look at the Toronto ecosystem over the last couple of weeks. It's been interesting. You've had a couple of large companies disappear, get acquired, or the founders step down. So I think, someone actually got a lot of messages the last couple of weeks. Who are the next big founder? Who are the next big companies we should be looking at? Who are the founders we should be looking at? So getting a bit of an inkling that maybe we should be looking more at Taplytics. So do you want to share any information, about where you guys are at, or what jobs you're hiring for, or what should the Canadian tech ecosystem know about you guys?
So we're hiring across the board. We're hiring in sales, we're hiring in marketing, and we're certainly hiring in engineering. In terms of the next big company, I would take a look at what are the Toronto-based companies where you're using their product, where you genuinely have an admiration for what they're doing, and you have a team which is really committed to that problem area. For us, this is clearly a problem area that we're going after. And how do we help people just build great products? And I think that that's going to be the next revolution on the web and mobile. And I think that there's other companies that are doing that in so many other areas.
I'll give you one more shot here. What's the biggest misconception about Taplytics and the ecosystem? Or out there?
Well, I think the biggest one is that we don't exist. So the biggest misconception is that our company doesn't exist because the market area that we're in is so big. Yeah. We're competing in an area that is easily worth over in an enterprise value alone over $100 billion. So we're a small piece of that current market area. And that's, love the opportunity to tell more people about who we are.
Well, I did
But
see you guys in lots of research reports when I was doing some updates on some research for today's episode. So, what are you going to say, Andrew?
I was just gonna say that, like, when Aaron says that they don't know Taplytics exists, I think the thing is, like, it's a very big market and people don't realize.
Yeah.
And Aaron cannot say it, and I'm not going to say it either. But there are many very big companies who use Taplytics and rely on Taplytics, like rely as in, like, without Taplytics, their part of their companies, like their marketing divisions, would be like, we have no idea what to do with our lives. Like I am literally going to be out of a job because Taplytics will disappear. And that's a pretty powerful thing, right? Like, and I just think it fits, Alex, when we were talking about just in general, these kind Canadian founders who are just diligently working away, and slowly, 10 years from now, people will say, oh yeah, that was an overnight success. And then you're like, no, it's not an oversight. It was 10 years of people just working diligently. And that's the type of thing that I think is really powerful about Taplytics.
Cool. I'm going to bring a couple of questions in from an audience. Question from Grant for Andrew. What would your next great Toronto investment look like and why?
Oh, man. I don't know. Am I supposed to say it's like it came from Waterloo?
It could come from Montreal, Vancouver, wherever you think it still comes from Waterloo.
It could come from anywhere. Honestly, I think that the next great investment will most likely come from, there's a number of different areas that I look at, right? Like there's consumers probably going to have some really interesting things going to happening to it. There's sort of these crufty industries like construction or healthcare, like these large industries that just really can have pretty big impacts in those areas. And then obviously I mentioned this before, but I mean, in the world of crypto blockchain, like that's going to be a real wave that will happen in the future. And if you're a really young person right now, no idea if it's going to go up. It'll probably go up and down. It'll go in many ways, but there's going to be something very powerful because that's a piece of engineering architecture that is both simple and fundamentally different, and will remake parts of the internet. I mean, it's programmable money right now, but in the future, it'll be, it effectively is, how do we create trust in a trustless environment?
Great answer. Question from Marilyn, and maybe this is it for you, Aaron. Do you have any suggestions for how and where to find the right pre-seed investors?
I would take a look at companies that you admire that have done really well and take a look at who their investors are. There's usually, within the founder community, founders are always open to talking to other founders and giving them advice on their story. And I think that that's really the best way, is get an introduction to founders that you think have really grown and ask them, how have you found your investors? For us in Initialized, I would recommend everybody take a look at Initialized if you're at that stage, because it's not a Shark Tank like atmosphere that you might think. It's really this mutual respect and admiration we have for each other, and the journey and the excitement for the journey that we're on together. I think if you can find that, that's great.
So I love that, because I'm going to force Andrew to do many more investments in Toronto and Canada.
I feel like I'm forcing two wonderfully kind Canadian guys to shill a little bit, and that's and you guys must be extremely embarrassed to do it.
Well, I'm gonna,
Yeah.
Go on, Aaron.
I was going to say, I mean, Gary at Initialized is sort of the honorary Canadian of the group. So
actually, the funny thing is, people don't know this. Gary is actually, he's actually, if I remember correctly, he was born in Canada, so he's actually Canadian. In that regard.
In a post-COVID world, I'm gonna lean on the two of you to get him up here to do an in-person event. One last question from the audience, and I have one question to end it up, because you've been so generous with your time. From Erica, for early stage startups, how do we know the best time to start conversations with pre-seed funders? I have my own opinion here. I'd love to hear yours. So when do you start the conversation with investors?
Aaron, go ahead. I
would say that think about whether, what is the next thing that you need to focus on to take your company to the next level. So it's all about focus. And if that next piece that you if you take the time, you sit down, you think about it, and focus is something that requires capital, then absolutely focus on capital. If focus is something that just requires putting your head down and building, or understanding the problem area, or talking to users, then go talk to users. Don't talk to investors from a funding perspective.
I literally can't add anything more. And this is the reason why founders are so much better than us investors, because just, I mean, this is why I'm just so eminently impressed by Aaron.
Yeah, so I love that. Well, the next last two questions. How can folks get in touch with you both? Email, Twitter, what's the best way?
You can always send me an email. So I'm Aaron at Taplytics, taplytics.com, or hit me on Twitter at Aaron Glazer.
Andrew?
I'll reply.
Cool.
For me, easiest thing to do is actually just hit me up on Twitter. I have such a small following that it actually turns out to be like a good direct message route. It actually turns out to be okay, which is wonderful. I don't have the problems of other folks, so which is wonderful. Or more importantly, is nowadays I'm on Clubhouse a lot, and actually Aaron and I spend a lot of time on there. We're just like kind of hanging out. So you'll actually, that's the best place, because you can just catch me and you'd be like, we can talk and I really just I'm an extroverted person, so during this time of COVID, it's my only outlet.
So I think Clubhouse is still by invite only. Maybe we'll Liz, we'll just I have a bunch of invites. We can post them in the chat later on. I'll give you my link.
My God, now it's over for Alex. He's gonna get hit up with Clubhouse invites across the web now.
Well, I'm surprised they give me invites. I have no time. I don't have the time for Clubhouse. So it's either that or my kids, and for some reason I have to spend time with the kids. My wife's not here. Last question for you, and I'll let you guys go, and I really appreciate your time. If you could see one company that you'd like to see exist in the world, so what's the one startup you haven't seen anyone try to tackle, the one problem?
For me, it's really nerdy. For me, I would just base it off of the things that I do in my spare time. So Andrew alluded to me hacking out on Arduinos. So for me, it drives me nuts that one part of my house is warm and one part of my house is cold. And I've just solved that problem through little things that I've built for myself. If somebody did that for me and I could just buy it, that'd be great.
I'll buy that too.
But thinking through it more from what really interests me.
Cool. And then Andrew?
Yeah. So for me, there's so many. So I'll just choose. I'll just choose one of my more wackier ones, which I think is just fun, and I think that whoever makes this will probably just it'll be a great company. So I actually think that there's a world where we could have autonomous RVs. And the reason why is because there's a housing crisis in general, but then in addition to that, obviously autonomous is becoming a really big deal. People don't know this, but if you watch the movie Nomadland, there are individuals out there who live in RVs and they travel around the world and they work at Amazon stores. They work in a number of different places, right? And they hang out and they really, and the thing about it is a number of these folks are actually senior citizens. And I just want that if a senior citizen is going to go ahead and go to national parks and enjoy their life, I don't want them driving. The truth is that I think that having an autonomous RV both solves potentially the housing issue and the temporary housing issue, and more importantly, can help, I think, individuals be able to move labor to where labor is needed, and it just makes my life. It just makes me think that life would be a lot better from that perspective, because you can then live the dream of being a nomad or live in the van life or just being a hippie again. And that's something I wish to see more of in the great United States, because I think that we just maybe it's because it's COVID, but I just feel like everyone's got to get out there.
Yeah.
Really enjoy it outside.
So now I'm gonna follow Andrew's Twitter just to see who pitches him this now. Andrew and Aaron, thanks for the conversation. It was very insightful and very helpful. It took more time than I thought it would, but I really appreciate it. For everyone else that's here, sorry, Aaron?
I was going to say thanks, Alex.
Oh, my pleasure. And yeah, cool. Yeah, for everyone that's had a good time, if you would like to leave suggestions on future speakers, leave it in social media with the hashtag TechTO. If you should, otherwise, you should check out our membership program, because we have 2 really great events coming up over the next couple weeks. On February 25th, we have Farhan Tawar, the VP of Engineering at Shopify. He's joining up for a Q&A and social night for our insiders only. So this is one where you can ask him any question. And if you've seen Farhan speak at any of our previous events, he always has an opinion. It comes fast and furious, and it's definitely worth attending. Finally, the next event after that is we're going to do a limited seating roundtable with PR experts from Talk Shop Media about creating media strategies. So if you're about to raise that round and you want to get some PR from it, you should email Liz and get an attendance there. And then finally, we're always looking for great founders to participate in perfecting the pitch. That's where we let you pitch to our audience and get feedback from a couple angels. Hit us up if you're ready to start pitching your company. And then finally, on February 19th, we have Stephanie Lapierre from the CEO of Tealbook, and Michelle McBain from Stand Up Ventures, who are going to talk about how that round came together. Michelle's been supporting Stephanie since the beginning. Stephanie just raised a huge round. You can register right now on the link in the chat. Finally, if you have some spare time, you can stay around the network. What we ask for you is you'll be matched with other people in the community. Take the 4 minutes to really get to know them. Don't ask, don't be transactional. Look for something to get to know them, see how you can help them, see how you can make this community go further. And for the people that have to leave now, it was our pleasure to have you here, and thank you for joining us.